Hello, clients and friends. This is Dylan Simon with Kidder Matthews coming to you from Seattle, Washington. Tomorrow is the last business day of June, as well as the last business day of Q2, the first half of the year. It's been a really exciting month. And I think I had mentioned to everyone who watched this video last month that we were starting to see an acceleration in the market. And in the last 30 to 45 days, we've seen the biggest changes, I'd say, in the transactional multifamily market than I've seen in the last 24 months. So I'm here reporting on a couple of articles and updates that I've seen this past month that I think you'll find highly relevant and interesting. So let's kick it right off. This first one is a great article from earlier this month from the Wall Street Journal. It's outlining the jobs report that came out in May. It was dubbed by some analysts as the best, worst jobs report they have seen. We had a large uptick in jobs added in May. We've also had unemployment tick up at the same time. So really we're seeing resilience in the economy, but we're also seeing a little bit of unemployment creep in. So it's mixed signals, but the reality is the economy is really resilient. And I think that's a great segue into what I found to be a really great article for the Northwest next from Apartmentology, which is from apartments.com. It's their data and analytics arm, and they're reporting on the top 12 markets with the best rent growth in June this year. And Seattle's number 10. I've not seen Seattle on a best list maybe since the start of COVID, certainly not on a top rent or top rent growth. And I've been predicting this for a long time. Rents are going to escalate in Seattle. Everyone is worried about the development pipeline. We're already seeing great rent growth in Bellevue. This last cycle, it started in Seattle, went over to Bellevue, and then grew out from there. This new cycle now is going to be the opposite, and those grass shoots are already forming. So great to see us in the top 10 list. My prediction is in the next 12 months, we'll be at or near the top of this top 10 list of apartment rent growth markets. And finally, a great piece. This came out in April, but I'm highlighting it now. This is from KKR. They just closed a $2.1 billion 10 property portfolio they bought from Lennar AMC or LMC, Lennar Multifamily Communities. Why is this relevant right now? Why do we care? Well, back in April, Blackstone closed on a $10 billion apartment portfolio and a lot of suburban properties. This is almost all urban properties, and it's a bet on getting back into the urban markets. It's relevant now because we're getting into price discovery. We're discovering what apartment values are worth, and we're starting to see an escalation in the market. Most investors, most of the market sees this 6 to 9 months later. They're too late to miss the market. We are seeing the start of it form right now. Our team closed 2 transactions this week. We have 7 more closings already non-refundable in the next 30 calendar days. The market is starting to accelerate. So if you're waiting for everyone to agree that the market has recovered, you will be too late. So it's been a really exciting June to not only see some of these metrics tick up that we predicted, but also see real transactions form and get closed. So as far as being mid-year, it will be a strange year with the election at the end of the year. I think a lot of people are predicting it may slow down. We're predicting just the opposite. We think things are going to continue to heat up. I highly recommend you reach out to us, talk about your apartment properties, talk about valuations right now. If nothing else, just to talk about trending we're seeing as the market picks back up. Wishing everyone a fantastic summer, a great 4th of July next week. Please give us a call to talk about your properties. We're excited about what we're seeing in the market. We're excited to talk to you. Thanks so much. Signing off for June. Take care.